Hi there, traders. This is Brad Gilbert with today's trading action. All right, now market took a little bit of a beating on those US CPI numbers, right? Fully factored in. And if I just have a look at the charts here, the if anything, the dollar slightly came back. It was, I guess, the whole picture as far as interest rates and what the Fed are going to be doing is completely factored in. Like so, you know what? Weaker numbers, it's got nowhere to go, and that's a little bit of a lesson for us as we go through the market from here. But you know what? Some of the safe havens just drifting sideways. Dollar CAD caught up between the dollar imbalance and what oil's doing. Oil's starting to fall, so maybe dollar CAD goes up. Euro, we've had a little sneak peek above 110 the figure. But once again, those US CPI numbers, we initially saw a bit of dollar weakness and then a ricochet very quickly. So a little bit nasty. So fair value right now is where these things are. And they are, you know what? The dollar strength is just holding up at the moment. So this clears the airwaves. Now we've got the US CPI out of the way, right? It does sort of freshen things up. So the numbers now will start to sort of play out. It's like a reset, right? From the CPI with the rest of the fundamentals. Just want to show you the news here, right? Dollar softens against euro as inflation data shows cooling, right? Once again, just to show you the opinion pieces, sort of, so to speak, because that's not actually not what happened. Now let's just have a look here. Global markets. If you're just having a look at the markets at the moment, we've got a US equity futures up. The interest rate yields on the US Treasury slightly down, right, which supports a stronger equity market. And I mean, the markets have just been reset pretty much as we rolled over the 5 p.m. New York. So no sort of real clarity there, but it's, as we've seen, if I just go back to the charts just quickly, Euro, Sterling, Aussie, Kiwi, if anything, they're not really going down. I don't want to sort of over embellish it like the news, but they are just giving up a slight bit of ground there after those US CPI numbers. So that sets us up for what's coming out today. Now, we've had some Japanese GDP numbers, better than expected, but no big deal, right? The Bank of Japan have obviously hiked rates, and that's all there is to see at the moment, right? It's really going to depend on what the dollar does to where the yen goes, and actually the inflation numbers for a lot of the other countries. Today, okay, there's a bunch of numbers here. We've got the Aussie employment numbers. Now, the RBA is probably one of the only central banks outside of the BOJ who's not cutting rates or not on a cutting cycle just at the moment. So these employment numbers have the chance to actually highlight that one way or the other, right? And the Reuters poll for the employment change, 20K, unemployment rate 4.1. Now, I'm expecting these numbers to be worse, right? Just from what I've seen around the economic situation in Australia. So that could lead to them moving to a cutting sort of cycle quicker. If for some reason the numbers came out, better than, 48.3 and 4%, well, you know what? It's going to be a delayed, move by the RBA. But I can tell you, we're on the same planet. We're in the same global economy. If everyone else is feeling the pinch, you can be sure as hell it's happening in Australia. So I'd be focusing very closely. I think if we get numbers on the low end here, right, an unemployment rate definitely above 4.2 and a change less than -5, well, we're going to see the Aussie come off. And the good thing about that is, right, this is very close to a no-brainer train alert. It's already sort of drifting low. It's in limbo. This has got room to really fall out of bed. The only thing is we don't have that gorgeous sort of entry level, but that's what I'm looking at. I may update a no-brainer trade on that because it's just like it's set up perfectly. And especially the nail in the coffin might be, we might get some weakness in the Aussie numbers. And if we get some more weakness in the Chinese numbers, well, then that'll be the nail in the coffin. And the Aussie will be sliding lower, as will the Kiwi on the weaker Chinese numbers. So we need those two things to line up. If for some reason the Chinese numbers come out stronger, Aussie weaker, well, you're going to get a bit of an imbalance, and that confuses the market, and that's where things sort of stop. Now, coming into the European session, we've got the UK GDP numbers, right? Usually pretty big. The services data, important. industrial output, manufacturing output, otherwise known as manufacturing production. Pretty good numbers, right, in normal markets, but we've just had the UK inflation numbers. They were weaker. What we could be looking for once again, with the US dollar just coming back slightly, if we get weakness here across the board, okay, we'll probably see, because the momentum at the moment is the same way as the Aussie, and we might see sterling just drift lower on weaker numbers. To me, the downside right now after the US inflation numbers is the way to be looking. So I'll be looking for weaker numbers there. We come into that North American session. There's a bunch of sort of secondary peripheral numbers, the initial jobless claims, the weekly number, Philly Fed Business Index, a well-respected number, retail sales, industrial production, capacity utilization. These are all, like, on their own, good numbers to be looking at. Unfortunately, a lot of them, I mean, you've got a bit of a gap here of 45 minutes between industrial production and the bottom ones. These, like, retail sales is a thing on its own, right? And once again, we've seen US inflation slightly lower. Once again, if these numbers, well, if they come out weaker, that's where we might see the dollar start to drift lower and euro, sterling, Aussie, Kiwi start to go up. So two different ball games here today, right? You've got the Asian session with the Aussie employment numbers and then the Chinese numbers. We've got a bunch of UK data, right, to factor in. And then with the US CPI reset yesterday, we got a fresh batch of numbers here to digest and see what's going on. Wholesale trade numbers there out of Canada as well. So pretty much something for everyone in every time zone. And just having a quick look at the interest rate probabilities as we go into the various sessions. This is what I was looking at. The RBA, no change, 85%, right? That leads me, that's the raw side of the market. So if we get weaker Aussie employment numbers, that's going to change, and that's where the move comes from, right? Stronger numbers, well, it's already there, right? So to me, the raw nerve will be weaker numbers, and that'll see the Aussie go lower. And that's pretty much all we've got. If you look at with those slightly weaker Bank of England or the UK employment numbers, this is going to be getting very exciting, right? No change, 58%, cut 41.5%. This is going to be a line ball decision, makes it a trading event, and this makes all the UK data very active, right? Because it has an influence on the Bank of England's rate decision on the 19th of September, right? So this is the data, right? You know where to look, you know what to look for, and then we're just going to find the direction in the market. And right now, we've got a bit of a little bit of a soft dollar upward tone leading to potential downside in these instruments. And the good thing is we have data today. So you just match up the data with the technical setup, and that's where the cash is. Maybe short term, but you know what? That's all we've got to work with at the moment. So keep an eye on your fries. Have a good trade day. All the best. Cheerio.